So in this episode, we have the legend, the maestro, Samir Arora.
Basically, I'm from IIT Delhi and then I went to IIM Calcutta. And in the 80s, there were no real investment jobs in India. So I got the job with Alliance Capital in New York. My luck and everything brought me back. So I took that bet and came back.
Okay.
And I became India's biggest mutual fund manager. वही तो story है. That's, we beat the market by like some 30% per annum for 8 years. ग्वालियर का ये भाव है, टाटा का ये भाव है. अच्छा जी क्या करना है? अरे भाई कुछ बताओ, को रिसर्च लिखो, कुछ काम करो, सीखो. After 6 p.m. around that evening time, you will get the भाव copy. So then only you'll know, अच्छा ये price थी आज हमारे stock की kind of thing. I sold one big share, large company, and I did not have the shares. I didn't realize that I don't have the shares.
Oh.
So then the whole deal was you tell the broker to convince the other side, okay, yaar, please, shares are coming, because our shares have gone for registration.
Yeah.
And I didn't realize in the early days that I have to first check that sheet also. Valuation of PhonePe. 23 May, they got money from General Atlantic valued at 12 billion. They also don't have a bank. So that's why we say it's not bad, now because we have lost 20-odd%. Merrill Lynch was there with Merrill Lynch, BlackRock was there with DSP. Everybody was there.
Yeah.
अब यही तो बात है भैया, ऐसे थोड़ा आपको मिलने आया आज. Remember Helios? Why not?
Before I begin this podcast, I have a small request. I just saw my YouTube analytics and saw that over 90% of people haven't subscribed to this channel yet. So I have a small favor to ask you. If you've ever found value through this podcast, please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, like those videos, share them with your friends and family who are trying to build a business or just trying to understand how things work. It would mean the world to me if you do that. It allows me to bring on more guests who are trying to bring more value to you. It just makes this channel bigger so that I can bring on more guests, help you answer a question, essentially trying to bring value to you. You can also ask me a question in the comments and I can ask them to the guests or I can answer them myself. So please do me a small favor, hit that subscribe button, ring the bell icon, leave a comment, share the videos with your people. That's it. Now back to the podcast.
All right. So I've had so many guests on this podcast, Samir sir, but this one is going to be extremely special for me. Like the stock market world loves you. They know who you are. So in this episode, we have the legend, the maestro, Samir Arora. Samir sir, thank you so much for taking the time for joining us. Like, how are you doing today?
No, very good. Thank you.
All right.
All good.
Sir,
Friday is always good.
Yeah. And there was monetary policy today.
That I was not interested because broadly we knew that there will be no change.
Yeah. So, sir, for the few people who don't know about you in the stock market, so just new to the markets, can you give us a little bit about your background, like how you got into the markets and like what were your early days like?
So, my sort of story is that I have India's longest experience as a fund manager because I started early. But many people started on those days and they have left the business or retired or fired or burnt out. And so by staying in place as a professional, in job, obviously there might be individuals have more experience. So how that happened is that basically I'm from IIT Delhi and then I went to IIM Calcutta. And in the 80s, there were no real investment jobs in India because there was no real market also. Unless you were related to some broker or something, you might have been knowing about the market. So I went to the US to study to Wharton School, and after or while studying, I applied for jobs and I got a job by chance with a mutual fund company. I could have got a job with some research company. I would have been equally happy. So I got a job with Alliance Capital in New York. And then over the next I was to be an analyst based in New York, and that was the reason for doing these extra studies. But my luck and everything brought me back in the sense that I joined Alliance Capital in 1991 to be an Australia, New Zealand, Japan analyst. But 1 month later, the Indian reform started. Right. And because I was a new guy who had been hired and was an Indian, they said, you cover India also, but there was nothing to cover. But after some time, they got interested in India. And so that was my choice, that either I continue as Australia, New Zealand, Japan analyst based in New York, or I then otherwise have to move back to India to be part of the mutual fund, India mutual fund business that they were starting. So I took that bet and came back. And the summary of those days is that by 2003, Alliance Capital became India's biggest mutual fund company in equities. And I became India's biggest mutual fund manager. And among the new guys, that means excluding the UTI and all those who were there, but all the new guys, that is HDFC and ICICI and Birla, Tata, Morgan Stanley, Merrill Lynch, BlackRock, Templeton, all the big boys were there. And we were one of the few 100% foreign owned. We did not have a single Indian partner. And so nobody knew us. So that was my story, that how to go from zero to becoming number one was the thing. And
so that was early 90s during the reforms and everything. And like you're working in New York, like you're working on Wall Street. So before you got, like you said, you talked about you were covering the Australian market, the other side.
For not very long. I did it for 2 years. So in those 2 years, to cover Australia and Japan, I was not covering the whole market, but sectors in those countries.
Right.
That I was, yes.
So like you've seen how like global investing is, and you saw like how people in the like foreign countries think about investing when it was not very common in India back then. Right. So what impact did you see that had on you, on your current investing style, that you brought from there and you started your venture in India?
So first of all, I didn't start my venture. I was working for Alliance for the first, till 2003. And so during that time, I moved to Singapore for them only in 1998. And I became head of Asian markets because, in India, we were doing so well, which is how we became number one, that I rose in the ranks. But what did I learn was that when we started, at least 2 years, I had some training as an analyst. And there was no institutionalization of the market, in the sense that for example, I can tell you that in the beginning, when we said, now who was a broker? So they said a broker, to pata nahi kaun se hai. So we just take the guys who have a hotline with Unit Trust of India, those must be big brokers. So we said, okay, you are our broker also. So the only research they would provide is to call up and say, Gwalior ka ye bhav hai. Gwalior means Grasim. Okay. Or Tata ka ye hai. Tata means Tata Steel. So and then they will have a few others. So the only thing is, Gwalior ka ye bhav hai, Tata ka ye bhav hai. Acha ji, kya karna hai? अरे भाई कुछ बताओ, को रिसर्च लिखो, कुछ काम करो. Zero, actual zero, for many of them. So we have started that time, but to be fair, everybody who started at that time had similar India. Means you have to do it from zero yourself. In this, Alliance could not help me because Alliance wale New York mein baithe. I have come to India for Alliance. Okay, I did 2 years of being an analyst in other markets. But that doesn't mean that in India I know anything, in the sense I had never been an India analyst. But what's the story? And that's, we beat the market by like some 30% per annum for 8 years.
Wow.
So that is how I was, when I left, I was managing India's biggest equity fund, biggest balance fund, biggest sector fund, and biggest monthly income fund altogether. Each of them was Alliance, and each of them I was the fund manager.
And bigger than HDFC and ICICI.
Much bigger than HDFC. HDFC had HDFC plus a foreign partner, Standard Life, and ICICI had Pru, and Birla had Sun Life, and Raheja's had Templeton, and बहुत सारे थे. And then there were the pure foreign also, like Fidelity was there by that time. Merrill Lynch was there with Merrill Lynch, BlackRock was there with DSP. Everybody was there. अब यही तो बात है भैया, ऐसे थोड़ा आपको ले आए आज.
So that's why I said this is going to be an extremely special podcast for me.
इसमें शर्माने की बात है. Alliance was number one by a mile.
Right. So you saw the changes in India and you came back from your New York job that you had. What changes do you see in the Indian markets when you look at 90s and you look at
100%
right now?
Matlab, there's nothing same only. Everything is changed. So, for example, in the beginning, even the way of trading, in the sense we used to be in the physical world. So when you're buying, say, 100,000 shares, so each certificate was sometimes 100 shares.
Yeah.
So imagine our back office or the custodian or whatever, he would be given physically some bloody 1,000 certificates or 10,000 certificates, which the selling side has signed. And then the buying fellow has to sign, and then they will send it to the registrar, who will then put your name into the register of the company. So for 1 month or so, your shares would not be available to you. And one of the services that the brokers were giving was that we will get your shares back quickly, sir, if you give us business, because we know the registrar.
Yeah.
So we will go there to Hyderabad and all these places, and we will make sure that Alliance shares come back in case you want to sell. Otherwise, in that period, if some news breaks out, something happens. So these companies would not give you back your shares. If they wanted to rig those shares or they wanted to manipulate those shares, they would just refuse to give back the shares of the customers or investors who had bought those shares. So yes, it I think. Second is there was no real research, because the other side was also very new now. If the fund managers are all new, then the brokers also new.
Yeah.
And in the very beginning, the research was only that you will be given a price. And then we used to have one screen, the PTI screen.
Okay.
And the ticker says the price will move like it moves on, these channels ke niche. Not that you can't type and check your price. You just keep waiting. After 2-3 minutes, your
Yes.
price. And then at 6 p.m., well, after 6 p.m. or around that evening time, you will get the bhav copy. You know the bhav copy?
Yeah, you get it on.
It's basically the price sheet.
Yes, yes.
So then only you'll know, अच्छा ये price थी आज हमारे stock की kind of thing.
Yeah.
It's too good. It's been, but
So,
it was so much fun.
What about, do you have any stories like, what about settlement issues? Like you have to go to
settlement
register?
issues used to be there now, because, for example, sometimes I sold one big share, large company, and I did not have the shares. I didn't realize that I don't have the shares.
Oh.
So then the whole deal was you tell the broker to convince the other side.
Oh.
Okay, yaar, please, shares are coming, because our shares have gone for registration. And I didn't realize in the early days that I have to first check that sheet also, not just the fact that I own them, but that whether physically we have them back. So I said, oh, look at the stories. Then there was a story that if you are buying a large quantity, and if you get a bulk certificate, which means the certificate is for, say, a 10 lakh share or something, or whatever that. So sometimes it would be more valuable, because the guy will say, I will give you one certificate. Means very easy to. But if it's a bad market, there'll be a discount for a large certificate. Because maybe I didn't want to buy 10 lakhs, I wanted to buy 9 lakhs. But you have a 10 lakh certificate. Okay, that looks interesting because you'll get it in one shot. All these ridiculous things. So NSE has changed all that. And the depository has changed all that, and SDL and all. They really, really changed India.
Yeah, you talked about research. I have a personal story to share. Like my dad is a big fan of yours. Like when I was, when I was 13 or 14, I didn't know anything about the market. So my dad was an active trader back then. So he used to watch all these TV channels and see you, like hear your research, and then he used to trade based on that. And he made quite a money. So he said that before I started this podcast, he told me that tell him that I'm a big fan of yours. And thank you for all the money that he made.
So the good thing in the 90s was I've been coming on TV since 90s. So even before CNBC, I forget what that channel was called, but it was owned by these guys only, Raghav Bahel and all these guys. So one of the anchors on TV, live on TV, I know his name also, but I won't tell you. So I said, this stock is good. He said, ये तो 200 रुपए का शेयर है, कुछ सस्ता शेयर बताओ. So this is not what is the valuation, but the absolute price is like 200 rupees is too high.
Yeah. I mean, that still goes on, no?
Yeah, it still goes on, but normally the fellow know that you can't use these kind of word which you say basically that is too high. priced नहीं highly valued हो गया कि भाई price is
हाँ,
200 versus a 10 rupee face value.
this is going to be such a fun podcast. I'll make a quick disclaimer. I will unpack a lot of stories about stock markets, but quick disclaimer, like this podcast is only for educational purposes. None of it should be taken as investment advice. Who is this podcast for? Like, I'll cover the whole spectrum, people who are not experienced, who have just entered, and people who are fairly experienced, who have been in the game for a very long time. I'll try to ask questions from all those angles and everything in between, and I'll try to make this podcast worthwhile for you. Now, all you need is you have to share the same passion as we do. You have to understand what we are trying to do. Sir, right off the bat, market कैसा लग रहा है अभी आपको? Current market condition, March was very bad. Then we
But
ended in a
actually ऐसे
fairly
नहीं
decent.
चलता काम. You can't do it like this unless कि कोई बड़ा clearly bad time now. I mean, if something is clearly bad, that's different. But most of the time, market is not clearly bad or clearly good. वो है कि ठीक है market, where you should get plus minus the earnings growth of the market. मुझे लगता है उस type का market है, which means 12-15% type market index return, which is the historical average. ना market इतनी महंगी है कि लगे कि this is not worth it and you should walk out. और ये भी नहीं है कि you sell everything to buy. So it's a regular market which is actually maybe 60-70% of the time ऐसी होती है market. 20-30% टाइम होता है कि बड़ा extremely cheap और extremely expensive लग रही है. So it's an okay market, which is okay. Okay market is okay. It's not that every time you can only buy when something is incredibly cheap. Otherwise, I will sit on cash. I don't buy that argument because at sitting on cash, you make say 5%, 6%. Market में normally over time you make 13-15% at the index level. So normal sitting के लिए हम नहीं करते. हम कहते हैं ठीक है तो ठीक है. जब very cheap होगी tab देखेंगे, but very expensive होगी then only it looks की actionable. Because very cheap se pehle we have already invested.
Yeah. So last in Q3, Q4 of 2023, like all the participants, including myself, who are not too experienced, who have been in the game for like 5-6 years, like we felt the market is very overvalued.
5-6 years is very good because that means you came in before 19. कुछ तो पता है आपको कि life कैसे चलती है. The issue is about people who came in after 20 and who think that A, the market should give 30% return per annum, or B, that these are the crappy stocks that should be going up to 200% in a quarter because they got one order of 20 crores from some other customer.
Yeah.
And or the third is best. On Twitter, I see, look at these promoters. One promoter has bought 3 crores worth of stock. उनसे को भैया तुम जो world का size है, for 3 crore. I mean, the thing is, people are so simple because they are starting so from zero. They think somebody is genuinely trying to buy a 3 crore and shows his commitment. He's doing it to show you. It is not so much whether he believes, he wants you to believe. So there are many cases. I think the last few years have confused the public that what should be the returns from a market.
So one thing that scared me like in Q3, Q4 was that we saw how SME was like showing up, right? Like issue of 9 crore, 10 crore receives bids of 2,700 crore, 3,000 crore. तो उस पे ऐसा लगता था this is extremely overvalued, like there's too much euphoria. We saw some
actually, you know, ये euphoria नहीं है, ये लोग enjoy कर रहे हैं life in the sense total amount तो 10 crore ही खर्च होएगा because the issue 10 crore का है. आप जो मर्जी डाल दो 3,000 करोड़ 4,000 करोड़, how does it matter to the world? The trick would be, the losses would be कि after वो 10 crore का rigging हुई या rigging नहीं हुई, चलो बढ़ गया स्टॉक, अब आपने आके उसको 4 times लिया, तब आपको डरना चाहिए. जो है इशू 10 करोड़ का, आप 50,000 का दिखाओ सारा. मैं भी कहूंगा, अगर मैं करता नहीं हूँ क्योंकि वी आर फंड मैनेजर, अरे मैंने भी 100 करोड़ का ऑर्डर डाला है, चलो मिलना तो है नहीं. अगर किसी को मिले तो हार्ट अटैक हो जाएगा कि मुझे ये इशू क्यों मिल गया. बट वंस यू नो दैट द साइज इज वेरी स्मॉल, there is no signal in the fact that it was oversubscribed 1,000 times and 500 times. Every fellow knows he's not getting it.
Yeah. And then like, do you think that affects the overall perception of the market? Somebody who made
It is rigging. It is basically rigging by somebody or a group or cartel or whatever, because we have seen it every time in life. Yeah. But I'm saying it does not overly change. It is trying to suck in one more guy, one more guy, one more guy. But I don't think it reflects so much on the rest of the market, because if you see big picture, वो बड़े stocks तो चले ही नहीं.
हाँ,
The financials, the consumer, IT, ये सब तो चले नहीं. The ones which have worked, some of them might be fair and some of them might be blatant manipulation indirectly. So that is where basically a suspicious stock movement, in the beginning, take it only that stock is suspicious.
right.
I don't think it means that the market is therefore, because unless you see it in thousands or so, ho nahi raha hai mere hisab se, because the large ones you can't easily do it.
Right.
So at a market level, it is not happening.
Yeah.
You know,
Any interesting data points you're looking at, Samir sir, like on the overall market that you're closely tracking right now?
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
In terms of
like where the market is heading in at least 2
we
or
are
3
not trying
quarters?
to make it head, because our logic is that if you look at the last any period, last 5-year returns, last 10-year returns, last 15-year returns, last 20-year returns, last 25-year returns of, let's say, the NSE 500. In all these periods, mota mati, the Indian market has gone up around 12% to 16-17% annualized. Okay. And that looks a fair number to me, because our corporate earnings growth are in mid double digit. If you look at our GDP growth in nominal terms, our country is growing at maybe 6.5-7% GDP plus 5% inflation, because GDP is in real terms. So the country is growing at 12%.
Yeah.
Mota mati, if you're earning, and your corporate earnings, we know broadly speaking are in that range. So if the market is giving that kind of return, it is not bad in the past. Okay. So now when you have to look at the future, you'll say, what will you say? To get to 2-3 things. One is, is this some special time in life? And therefore the returns will be higher. No need. These returns are very good at a market level. These returns are good when you compare to other markets. And these returns are good when you compare to other assets. Means debt, real estate, gold. Yeah, दूसरा आप कर लो कि what US market did, what Asia did, Europe did, emerging market did, China did. उसमें भी India is up there, even in dollar terms. Okay. So then what will be your next view to say whether it's a good market or bad market? आप कहोगे if the recent returns are very good, so there is something to be nervous about, because normally we make only 13-15% in rupee.
Yeah.
And अभी तो बड़े ज़्यादा हो गए हैं. Or if the recent returns are very low, then you'll say, here, hamara, we normally do better than this. And last 3 years, mein corporate earnings have grown a lot, but market has not gone up. Isliye sasta ho gaya. Right now, the thing is that if you look at it for the last 2 years also the market is up around 14-15% per annum over 2 years. That means you look at calendar 22 plus calendar 23. So 22 mein NSE 500 was up 4%. And in calendar 23, it was up 24 or 25%. तो 2 सालों में वो 29% बढ़ा है. तो घूम फिर के वो 2 years में भी उतना ही बढ़ा है जितना वो 5 साल में बढ़ा है, जितना वो 15 साल में बढ़ा है, जितना 20 साल में बढ़ा है. इसलिए I was saying it is neither a great point nor a bad point. It's a ठीक point to invest. And I don't think that every time, as I said, you need the market to be overvalued or undervalued for you to be interested. Even if you can get the earnings growth, वो re-rate नहीं होगा. वो earning growth कितनी होगी? वो normally घूम फिर के आप जो मर्जी कर लो, वो 12-15% होती है. So when the earnings are very high growth, that normally happens because ये commodity वाली companies are suddenly start making a lot of profit. So it looks that our profits are growing at 18%. Then suddenly these fellows will lose a few $1 billion, and because a few $1 billion are a lot of this thing, suddenly it looked that our corporate earnings are growing at only 10%. But actually, या 15-20 टॉप बॉटम की, मतलब either the top performers in terms of earnings growth or the bottom performers हटा दो 10-10%, वो 80% is always growing 12-15%.
हाँ
प्राइवेट बैंक्स, वो कंज्यूमर, वो आईटी, वो एनबीएफसी, वो सब घूम फिर के आपके 13-15% ग्रो करते हैं. That is the story. The story is not to look at overall, because overall क्या है, either Tata Steel या Hindalco या Tata Motor या तो 2 बिलियन बना रहा है या 2 बिलियन खो रहा है.
हाँ
जब वो 2 बिलियन बनाता है, सारे एक बनाता है तो सारे बनाते हैं, तो suddenly corporate earnings of India are growing. Bull, they are growing. Those very 8 extra companies are growing, and those companies don't get high multiple. तो उनकी earning की value भी कम है. Similarly, when they do badly, which is half the time, उनकी वो value भी कम है. उनको छोड़ो. बाकी सही होंगे 15%.
Yeah, that makes sense. What about, you talked about in themes like IT, commodities, उसमें मोटा मोटी 12-13% you can expect.
No, you can't expect. नहीं, we don't expect even 12% in IT. I mean, generally.
Generally. When you talk about new themes or sectors, what sector do you prefer right now? And specifically when you talk about, we touched on commodities. Do you see anything there because the steam is building up?
No, we don't like commodity, but it's not that today we don't like. I don't buy commodity stocks because I think it's the most complicated to analyze in terms of what is happening to China and what is happening to Brazil, and Australians are selling to Brazilians, or this is beyond our normal brain. And we don't want to be where we are looking in the newspaper to see what is the price of aluminium and what is the price. It's not our game. And India is also not, when commodities are doing well, generally India is not doing well. Because India at conceptual net level is an importer of commodity, and it's very cyclical. And so unless it is some blatant times, which means suppose everybody is losing money, and you know that this is below cost of production, so you know kabhi na kabhi it will end, then okay, you might buy a little bit. But I am not into buying these global cyclicals, as we call them. They have never made money. If you look at yesterday, only the Forbes billionaires list came out. 2,000 billionaires are there. I have read up to about 1,200 of them. Just the name. And you will find, I think you'll find 5 or 10 of them which were from commodities. बाकी होंगे finance के, consumer के, technology के, some retailing के, which is consumer only. So if the world has not produced commodity billionaire, मुझे क्या जरूरत है वहाँ पे try करने की? So I don't do all that.
Any other sectors that you like?
Any other sector that you like? No, we like financials all the time. We like consumer half the time. And we used to, out of my 29 years, liked IT for 27 years. I even ran an IT fund, which also was India's biggest sector fund for New Millennium. But now I don't like Indian IT. I like US IT.
When you talk about US IT, you mean tech companies or service-based companies?
No, tech companies. That's what I'm saying. US IT is actual IT. Or UST, not I, UST. US tech.
Okay. Financial. Sir, I have a quick story to share on financial. So back in 2015 or 16, when I was like 1 or 2 years in the markets, right? I saw one of your interviews on financials. You were bearish on private banks. So my dad was kind of trading in private banks. You talked about,
I would not be bearish on private banks. I think
on a small theme, I think it was like for a small window, 2 or 3 months.
I don't remember. Okay.
So yeah, I told him like sell if you have any sort of private banks, because Samir sir said that he's bearish and like the market looks bad.
So it might have been on the market maybe. Because, HDFC banks I have not sold since 1995, which has always been my big holding, but could have been some other specific bank.
Since you talked about stock, like it was Axis Bank.
Axis Bank could be, I don't know. But that is possible. That or any other non-HDFC bank, I could have been bearish or bullish.
So you talked about Axis Bank, and I told my dad like sell Axis Bank because that's not looking good. The future is not good right now, at least in the short term. So he sold it. The stock went down 30-35% from there. So that was a good move. And recently you talked about PSU banks, like you have historically been against PSUs, and then you're kind of sort of bullish right now. So I told my dad like PSU banks look good because a lot of cleanup has been done.
So which one did he buy? Canara Bank?
Yeah, SBI, Canara and PNB.
Achha.
So
good.
So that was good. That worked really well. So
That's
thank
why
you
your
for
dad
that.
is happy with me.
Yeah, he's
Because
very
all
happy.
my
And that's so there was one thing that he said, like, tell him that I'm a big fan. So he's
very
emphasized it twice.
good.
Now, let's talk about like you learned about investing in the early days, right? You know how to identify emerging themes, let's say for that. If there's any sort of turnaround stories happening, how do you make sure that we cannot predict the extreme future that this is going to be 10x, 50x, or whatever that is? But when you see some sort of inflection point in a stock or something that's turning around in the business, so how do you spot that?
So it's not a matter of, first of all, because me and the team also, all of us have been doing this for 25 years. So the older companies we have been tracking them for 20 years. These newer companies, obviously, their IPOs and all have been, say, last few years. But the idea is not like that. You cannot pinpoint any one company and say, I have understood this, so I'm buying 10% of the company. We have, for example, in the last 2 years, not last 2 years, in the last few years, had some massive successes. For example, Varun Beverage, we made like 11 times in 4 years. And Zomato, we made 3 odd times in like 1.5 years. तो ऐसे चल जाती है कहीं. But the point is, we are buying more than the ones that work. So we are buying around 20-25 companies. We are buying two kinds of companies. One is the larger, well-known names where we are not, today, we are not saying that we are discovering them, but we may have discovered some of them in the past. For example, I own HDFC Bank since 1995, but now if I own it, I can't say I know something more than the next guy or I am very early in it. Or even ICICI Bank, which we bought in 2018 when this new CEO had just come. But now everybody knows, but we still hold it. So some 40-50% of our portfolio is these well-known stocks, which we feel can continue to do well based on current growth, current valuation types. And then for the balance 50%, we are trying to buy these new companies turning around, doing better or early in their discovery. Those we only buy 2.5% per name. Like in 2020 or maybe it was 20 and 21, we made 4 times on Dixon. But वो हम लेते नहीं है 10%. हम लेंगे 2.5%. So we are buying 2.5% in say 20 names. And then many of them work and a few will not work. And the few that don't work is part and parcel of the model. Because not every one of them will work. But point is, what I want to stress is that many people think that because they have met the company or they have understood the product, so therefore now they have covered all the angles. And therefore now they can buy 10% or concentrated. The reality is those managements of those companies also don't know how successful they will be or not be.
Yeah.
Because everybody tries hard in the beginning. Maybe after a few years, somebody loses this thing. And also, anyway, the guys are listed and we are talking to them. Obviously, there will be some difference between the good and the bad. But the good will not be 5. Or at least you won't know. In the end, the successful will be 5.
Yeah.
But you won't be able to straight away say these 5.
Yeah.
That is my logic. I say these all look decent enough. They are trying hard. They are working hard. And then reduce to whatever extent you can, but don't get carried away that you have exactly identified. I made 100 times in Z. So I have an interview which came in Business Today in the 90s where I said that this stock can triple, which itself was a very aggressive thing in my mind. The stock went up 100 times in 2 years. So from where I was thinking at 3, कि भाई 3x हो जाए तो बड़ा मजा आ जाएगा. The stock went up 100 times. Nobody knows like that. You are trying to buy 2% with whatever effort and research and this thing, but know that I found this one exactly.
Yeah. So when you look at all these companies, do you stick to like stocks that are only in, let's say, Nifty 500 index, or do you go out of that also?
No, we are not looking at that. We are not looking. But for example, I think Zomato, which is now one of our top holdings, has gone up so much. I don't think it is in the index. Maybe it is in the index now, must be. I have no idea. So we look at the index on those months and phases when we are doing badly. Because then we say, bloody, what does this index have, which we don't have? Why is the index beating us?
Yeah.
Well, most of our life we've beaten the index, so I don't care about the index. I will care about it and it is there. To be
Yes.
analyzed, because there are many phases. It's not that every day of our life are outperforming. But if suppose 1 month was very bad
Huh.
for us and the index did not do badly,
Huh.
100% we'll do an analysis कि भाई क्या चीज है ये, what is this bloody, where have we lost so much relative to the index. But most of the time, so we, like for example, for my offshore fund, which is now running into 19th year, our benchmark is MSCI India Index.
Hmm.
But we don't subscribe to the index because we are not interested in it. Except we just want to know on bad days ki what did it have, that we are
Okay.
able to find out from asking here there. We
Huh.
are not paying them money to analyze that when we beat it anyway. Good, let it be.
Yeah. So that's a really interesting way to measure. Like we hear all these stories, right? So buy and hold. If your stock, you should buy a stock, and you should be ready that if it falls 30, 40%, you should be okay with that. But
That is absolute nonsense of the highest degree. एक होता है normal degree, एक होता है highest degree.
so
So
that's a very,
sorry.
yeah, go on, go on.
No, so I was saying it sometimes is true. For example, now my HDFC bank has not worked for 3 years, but it's still my number one holding.
Yes.
So at some point it is correct that you will be able to, but it is not that if a stock falls 50%, I will hold it. No, you have to analyze it every month or every day, literally, that whether it should be held or not held, looking at the next few years. Right. So sometimes a stock will fall and you say, yeah, it is correct. It should have fallen. I was a fool that I did not realize it earlier.
Yeah.
That's what I mean. It is not that every stock, if held for long term, will give you returns. But when it falls and you feel कि हाँ यार ये तो, like for example, our best example is our HDFC Bank. यार, if 9% of our fund is not moving only because the HDFC Bank is not moving.
It moved recently, sir.
It moved recently. So what I mean is that obviously you will do. But I'm saying there is no, it's equally true. If a stock is going up every day, that should we sell it or not? So for example, even Zomato. So because we bought some, I think 3% and it's gone up a lot, and then we bought when new money came in, we can't let it go to 9 and 10% of our fund. So we will trim it because we have to have some discipline, and also we don't want to put all your eggs in one basket. In the evening, if something is wrong, I can't see Netflix because now I have to wait for tomorrow. Ki bhai kya hoga mere stock ka na. Ye nahi hona chahiye. Evening mate should be, it doesn't matter. Now we'll see tomorrow morning what happens.
Yeah. You have a very interesting investment mantra. Like I've been following that as well. Like read everything, question everything.
Correct.
Right. And like, can you walk me through that? Like, how do you filter the noise? Like when you read a lot, like you have all these ideas in your head, like it gets conflicting sometimes. So how do you filter through that noise and understand that this kind of thesis applies in this particular instance?
You should not be enamored by anything or anybody.
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
कि भाई this group is very good. आजकल बड़ी stories बनती है कि there's one group which is very good. I can give you 100 problems with that group of poor corporate governance. But anyway, so समझ आनी चाहिए वो हल्के because of many years. But it's not that every time you can be cold and unemotional. But one thing we have learned, so many people say that, since we've been around for so long, why haven't you figured out a way to find to find the real winners and concentrate on them? And my story is that, by the way, my NAV since 1996 in rupee terms, if I take Alliance plus Helios and convert Helios to rupees and remove the performance fee that we charge, but only the management fee, it is up some 500 times. So the point to understand, which people don't want to understand till they do it themselves, is that when you are buying something, it is, something means, suppose you have 10 stocks and you buy an 11th stock. There is no rule that because you bought the 11th stock, you are worsening your portfolio because you had 10 stocks already. Why did you buy the 11th stock? The 11th stock is quite likely to help your performance also, because luck works both ways. But more than that, once you've eliminated the bad, which I can explain, there is good prospect that they outshine even their wildest expectations. For example, I bought Bajaj Finance in 2011. Now, what is the logic for the company management in 2011 to even dream that that company can be so successful? There was nothing in their background to say it will become a $50 billion company. So if they could not dream, broadly, how could I dream? So the only way we are buying is कि we are buying a 2% stake कि आप ना next 3-4 साल के लिए ठीक लगते हो to give us 20% type return. It was 6 PE. Okay.
Bajaj Finance.
हाँ, in 2011. तो हमने कहा यार ये ठीक है, थोड़े पढ़े लिखे बंदे हैं, वो सिटी बैंक से आया राजीव जैन और संजीव बजाज इज गुड, 2% ले लेते हैं, नेक्स्ट 2-3 साल ही कैन गिव अस 15-20% रिटर्न, बिकॉज वो ये कर रहे हैं, वो कर रहे हैं, उन्होंने ये कर लिया. दे हैड दिस गाय फ्रॉम सिटी बैंक who recently died, I think a year ago, Nannu Pamnani, who said he was the head of retail in India, City in India. So after City, I think either retiring or pre-retiring, he joined and became their advisor on retail growth. So उन्होंने कहा जी हमारा experience है, plus हमने ये great advisor भी लिया है, and of course Bajaj family is well respected. तो हमने कहा ठीक है, सब कुछ सस्ता सा भी है, 2% ले लेते हैं, देखें क्या होता है. So that is what I mean. What I'm saying is that day I understood. So what will happen is the difference between me and the bullshitters is that suppose somebody bought 10 stocks. I didn't buy 10. I buy 40, right? 35, 40. Somebody bought 10 in which there was Bajaj Finance. Then somebody else bought 10 in which there was Yes Bank. And then somebody else bought 10 in which there were 3 bad ones. So bad ones to khatam ho gaye, wo to out ho gaye, matlab you will not call them.
Yeah.
A good wala milega, he will genuinely believe. It's not that he's fooling you. He will genuinely believe कि मैं मिला CEO को, उसकी आंखों में ना इतनी aggression थी that I felt it in my bones. So I quickly made it 8%. But the point is, the guy who saw Yes Bank may have felt the same aggression, but उसने उस पे ले लिया, लेकिन वो चला नहीं तो आपने उसे पूछा नहीं. Otherwise, जो भी factor आपने इस बंदे में देखा. So for example, you'll say, ये ना City Bank में काम करता था. In between, this is I'm talking about Rajiv Jain of Bajaj. वो City Bank में काम करता था. He was, say, I don't know what age he was at that time, maybe 35 or something. So he was 35 in between leaving a multinational bank. उस वक्त तो एक बड़ी foreign job गिनी जाती थी. उसने वो छोड़ के एक smaller company जहाँ पे ethics of the Bajaj family, the training of City Bank. तो मैंने ये देखा, passion देखा, क्योंकि 2 बजे जब मैंने बोला कि lunch खाने चलते हैं, उसने कहा मैं lunch नहीं खाता, मैं तो काम करता हूँ. Suppose I'm just making it up. No, the thing is, there'll be 100 other guys who would have felt some other form of passion in the management. उनका चला नहीं, तो वो तो गायब हो गए, आपने उनकी इंटरव्यू भी नहीं ली. So this guy starts believing, the fund manager, कि ये है model. I must call them at lunchtime, and if they agree to my lunch, I will not buy the stock. देखे नहीं तुमने रोज ऐसे होते हैं कि I will call them at lunchtime. Right. And if he comes out, that means he's ready whatsoever long, and I will deliberately offer him wine. And if he has the wine, that means he is kuch bhi khani. That's what I mean. That you can make a story not to fool the other fellow, but to fool yourself as if there is this formula. So the formula is only कि आपने सब screen out कर दिया गंदा कि management खराब नहीं है, history खराब नहीं है, valuation is not bad. The growth rate doesn't look below 5%, 8%, that the industry is not bad, it doesn't have so much government policy driven influences, there's that the sector is not getting disrupted. Ye pehle you remove. Then from the balance you buy slightly more than the number of things that you think can work. And then you pray that those guys do a better job than they also thought. And you also thought, but you have made sure that they won't be disasters in any way. That is the only way. Otherwise, you don't know. How will you know? Oh, I saw the passion. I saw the work floor where I went, and some worker was very excited. And when I went at 6 o'clock, no, none of them had left the office. There were thousands of examples for everything.
That is true. Like, sir, but individual investor, like, they don't have any sort of ideas like what's going on in the back end. Sir, वो identify कैसे करे
Is why
bad
I'm
man?
saying that is मैं बोलता हूँ कि कहाँ आप इसमें चले गए कि we are betting on management. Which is what I keep telling the retail guy. They say we are betting on management. You have seen an interview on YouTube, which may have been a PR exercise. So for this, I recommend a book called The Halo Effect. So the Halo Effect basically is trying to say that if a stock is doing well for long, 98% of the public will say this is good management and this is good corporate governance.
Yeah.
So what is good corporate governance? Agar suppose a guy takes a lot of ESOPs, if the stock goes up, we'll say, you see, he has skin in the game. अगर वो स्टॉक 4% गिर गया तुम कहोगे साला बड़ा डाइल्यूट कर रही है मैनेजमेंट हमारे को. Point is that is the book that everything is in as an explanation. For example, if a guy, when you go to his office, you find that behind his table is the business news channel or a Bloomberg screen, and his company's ticker is there. So he's seeing his share price. If that company is doing well, you will see he cares about shareholders. He wants to make sure that wealth creation ho rahi hai because he realizes that the public at large expects certain things from him. If that stock falls, he's only looking at the stock price. He should be concentrating on the business. So everything in life is like that. Therefore, we say, don't think that you have identified the good. First, remove all kinds of bad, which means the fellow who's done badly is also known to the market. I can't give you names here, but everybody knows. Yeah, if you look at all the reports that are written by anybody, whether it is a broker or it is some other fund manager or on the market or these investigative journalists or the morning context or Ken, every day you will find उनकी list बना के उनसे दूर रहो as far as possible unless you know something more. Do you think that a stock price which goes up 350% in 2 months, is it normal? If a stock in 1 second of opening is limit up for day after day, it should be obvious that somebody is rigging it. ये normal नहीं होते काम. If that stock has no institutional ownership, zero, there are many. And the stocks are up 10 times and 20 times. So now one stock in the end out of 100 such stocks might actually be a good stock. It's just that nobody realized. But 80-90% of the time you will lose everything according to me. That is the way to look at it rather than saying I am betting on good management. You don't know. Don't bet on bad management. Some things are too obvious. And therefore I say on Twitter, if somebody loses money in retail, don't expect sympathy. We are going to say that is your education because you are going in open-eyed. You are going in because the price is moving, even though you also at the back of your mind know something is wrong. How can a company go up like this in a short period of time?
And that has a lot to do with understanding valuations also. And we talked about financials, like you look at P multiples, book value, and all these things. But if you had to explain, let's say, to a person who is very new, retail investors, right? How do you value a company based on simple financial metrics? So how do you do that?
But generally, the answer to this question is, if you are very retail, please do your job and give that money to some fund manager. Let him charge 0.5% fee for a year for all the work he will do. But since you insist on learning, put some money aside and then analyze, first of all, to invest in the market, enjoy, or even if you don't enjoy, understand business, which means what does this company do and how does it make money? How? Forget about your valuing it. वो क्या करता है जिसके लिए he makes money? What does he do? For example, on Twitter, one guy told me, how can Zomato be valued so highly? All he's doing is taking food from a restaurant and coming to your home and doing it. How can you be worth so much? Now for that, it's a good question. His first is to say he's not collecting for one person and giving it to the other. He's doing it for so many crore a day or a month.
Yeah.
He has to coordinate thousands of riders, thousands of restaurants, millions of customers. Nobody should get the wrong food. Nobody should get this. And he is making X rupees out of it. That is the business. If you make it simple and say, how can you make money? It's like saying, why does a D-Mart make money? All he does is he takes goods from laborers and gives them to you. ऐसे नहीं होता ना? So first understand, the Paytm nobody understands. We understand, but I'm saying people don't. वो करता क्या है? वो करता क्या है? You go on his site, it will be written. If you don't like that, go and see his YouTube video and you'll understand there. But you refuse to understand, oh, karta kya, because you have not seen it. For example, that way somebody can say ETF. How can ETF guys make money? वो तो 5 पैसे लेते हैं. Sometimes the fee is 5 basis points. Then can you go and analyze how the US ETFs, how much money they make in the end? So the point what I'm saying is, first understand the business, then half the job is done. Second will be this valuation, and I think for 98% of the crowd and even institutional crowd, price earning is a very good indicator. Now, what people say to counter this, because they have to show complexity, is that price earning does not reflect properly because the earnings may be different from cash flow. So the thing is that first line, when you understand, then only you can go to the next line. You can't straight away say, I don't, because maybe when you see, it looks key. If I look at its history or I look at it compared to others, it is sort of similar style. So there is need to go beyond. But to a first time guy, straight away telling him, no, don't look at this. No, go in order of what the public looks at or the markets look at. And then you can go. But as I said, the first thing is to read about business. I asked one son of a friend. This was about post-COVID, so must have been 3 years ago, 2 years ago. He said, what do you do? So all these young guys, you are not that young, because since you said you started in 14, said my dad has given me some 1 crore or 50 lakhs or some 25 lakhs. And so every morning I call my broker, he told me the name also, I'm not telling you since he's a regular broker, some sales guy of the broker. And every morning he tells me something, this stock is looking good, bad. So I do some trading. So I said, what newspaper do you read? He said, no, I read online. I go, what do you read? No, I read here. Well, I mean, fucker doesn't even read a newspaper. I said, at least read Business Standard, Economic Times. He is not refusing. He was not even reading a newspaper. And he thinks he's doing trading or something because some broker every morning tells him, do this stock, that stock. So I'm saying, first learn to read, particularly if you're new. And not just read a book, because that might be more complex for us. Read a business magazine, read a newspaper, go and see a proper YouTube video of whoever. Spend 1 hour, half an hour properly on it, not just stock with
Yeah, that's very common. Stock ka naam de do bas. Sir, the only reason that I started this podcast, like the name of the podcast is Business Nerd, because I was passionate about learning what business is. So I can resonate on that. Like if you're a retail investor, at least you should be passionate about understanding businesses.
Correct.
पता नहीं lot size change होता है उसका पता नहीं है मुझे, but I understand businesses. So sir, I'll give you. I want to know how you think of different sectors, and a lot of people will benefit from this. I'll give you 5 or 6 names. Just tell me 1 or 2 lines how you think of
one sector.
If you want to invest in that sector, what are few things that come to your mind? Banking and financials.
So banking financials I like because I have from the beginning been in these private sector banks on the basis that private sector banks win or have won market share against state-owned banks. And in India, 2 or 3 of these, or 3, 4 of these have done very well. They are good corporate citizens, and they have. And India is otherwise, it's not easy to open new bank branches. If you type in US, they I think have 7,000 banks or something like that. You can type and see it's some big number like that. So in India, it's very good, and I like banking because it grows at some 1.3, 1.4 times GDP. So आपको 15% growth मिल जाती है, which is a great number to have.
Fair enough. What about pharma?
Pharma we currently like, but pharma is more complicated because pharma you have to figure out whether he's a US oriented guy or he's a domestic guy. If he's a US guy, then it is more subject to regulations, and mostly in US you will be doing bulk or giving it to somebody else. So we like the CDMO type guys. Uspe kya hai ki the fellow is sitting here working for somebody else and effectively is an IT equivalent model in pharma. And if some of those trials or drugs become successful, then he can get the production for that. But overall, these days we like pharma. Pharma is not for like financial. Mostly we've always been bullish, more or less. Pharma we come and go right now because we want to be a little defensive. We like it.
What about consumption story, FMCG?
FMCG we don't like, but consumer we like because we like the rich consumer. Because the rich guy is doing well. And not only in India, in the world, there is big disparity of incomes and jobs, or whatever, but basically income. So like the rich guys are doing well. And so premiumization, you can call it, or actual rich, like we own the Mercedes dealer in India, and in our offshore fund, we own Louis Vuitton and all that. Rather than owning the soap shampoo guy, who's anyway also not growing as much. So for example, Zomato, we have made money, but Zomato is growing because it is like a new thing and taking away effectively the market share from thousands of guys, not market share, but taking away their fee to be able to. And in the Kirana business, he's taking away the Kirana fellows business and delivering himself via Blinkit. So it is more new angle to take away market share. He's not really expanding the food. It's not that more people are eating food or shopping more.
Yeah, Zomato is a very interesting story. Like there were so many guys before Zomato, and that one Zomato that hit, Uber Eats. There was a lot of other
So by the
players
way, it's
also.
true in every business in the private space. There are always 10, 15 guys because Indians are copying a foreigner model, right? So when you are copying, nobody gives you the right to copy. Everybody can copy. So there will be 10 companies with 10 P funders. Then they will fight with each other. Then 2 will win. If you own those 2, you will win many times. If you own the other 8, you go to 0.
We talked about IT. What about infra, like broader infra, like includes?
We never like infra because infra means your customer is GOI and GOI never has enough money to pay. And if you are that kind of infra, which means you are a contractor type to a state government, to a central government, to some. Normally, in the end, you get stuck on some payment on the other and you go to 0.
And the last one is like something that you don't like, fintech.
Fintech, actually, I don't not like. Now I own Paytm, and actually Paytm hasn't done well, but I like Paytm because I think that its valuation has fallen too much. Like it's valued at say $3 billion, in which there's about $1 billion of cash. And if you look at PhonePe, do you think PhonePe is bigger than Paytm or smaller?
I think it is smaller. Paytm has the largest market share.
Okay, so PhonePe, if you type on Google and say valuation of PhonePe and new valuation, not some P20 valuation. If you do 23, they got money from General Atlantic valued at $12 billion. They also don't have a bank.
That's poor. Really...
so that's why we say it's not bad. Yeah, now because we have lost 20-odd%.
12?
देखो 2023 Jan ka type and show these guys valuation of PhonePe.
Yeah, 12 billion raised
and 450 million from General Atlantic. 450 million. Correct.
Wow.
And this is in 23. So the correction happened in 22. In 23, the markets was up. Actually, Paytm also was up a lot. I think 30-40%. In 22, sorry, in 23. So we are talking about bottom pe hui hai evaluation, not. Ab iska koi matlab nahi hai because this fellow cannot go public.
Yes.
Till Paytm does well because nobody is going to buy it. 12 billion.
और कोई major player नहीं है, like they have to follow.
और है भारत में ये वो बड़े सारे हैं, but जो list होता है ना वो hero होता है. For example, when there was this fight between Swiggy and Zomato. And Zomato was already listed, and people were saying, Swiggy is becoming very competitive. I said 0 chance. 0 as in 0. Because if Zomato stock does not do well, that time Zomato stock was 60, 70, then Swiggy can never go public. So Swiggy backed off.
That's true.
Swiggy started a platform fee. Will back off because you want the other guy to do well. Then you can say, give me a small discount and let me go public. Otherwise, okay, fight till the end. So if they fight too much with Paytm, They cannot go public. It is in black and white. How can you come and say, I am smaller, but I did not have a bank to begin with. That, so give me 4 times valuation. They'll say, no, show 100% of KYC show, because that fellow didn't have KYC on a
Yeah.
So nothing cannot work.
That was really,
That is my
I
bet.
personally feel that was really harsh on the company. But anyway,
Of course, it's
who are
okay.
we to judge?
Yes. Part of game.
Yeah. Risk man. Sir, I want to know about you're managing a very large portfolio on your personal capacity and like in the public markets as well for everyone. Like, what about any risk management metrics that you have in your mind, like in the first report
So
that
first
you
of
see
all,
on?
I don't manage a personal portfolio. I'm the very big investor in the fund. Okay, so I do only through the fund. Okay, now the question is risk. So first of all, there is a risk of single country. Nothing can be done. That is our life. We are India-oriented fund managers. So the only other way we have controlled the risk is that in our offshore fund, we are a long short fund. So we short also. So that reduces the risk. We are normally short 20, 30 stocks all the time. And the second thing is because we have these two categories of weights, which is smaller ones, we have only 2.5%. If they go up on their own, they can go up, but we will not buy 5%. And it's the regular large names where we'll have 5-7%. So that is the second level of sort of diversification carrier. Third is that now over the years, because of seeing how bad is, we no longer say that in any situation that this is the best thing, India is the best thing ever. Because once you say it every morning, when something bad happens, you will say, no, it is the best thing. So just to tell you my personal story, I used to collect bulls.
Okay.
I have many bulls. So you can see here also, there are many bulls here.
Yeah, I can see that.
Okay. So after 2008, I have started collecting bears also. So I have about 8 or 10 bears and maybe 30-40 bulls, so that I am not neutral, but little bit balanced. That is the risk control. Otherwise, seeing bulls all around, including paintings of bulls, if you can see here at the top, everywhere. So if I do like that, I used to feel it is my job to be bullish. No, my job is to be right.
Right, yeah.
But for many years, and even now, many fund managers think, even I used to think like that it is my job to be bullish. No, my job is not to be bullish. And after 8, I realized. So that is my risk control when I collect bears.
That's very interesting. Like you have to juggle between two different things. Like you might have your personal, like you might have investment in one stock, but rationally thinking, you might have to be bearish for a short-term period of time, whatever that is. So how do you manage that?
No. See, since we are long short and there's no separate portfolio, since all of us are investors in the fund only. So if you are bearish for short term, you either sell it or you, normally we have never done that, have the stock and short the future. Although in theory, you could do that also. Yeah. So that is going on for now 19 years. This is not a contradiction. If you're bearish on it, you throw it out. If you're bearish on it for 2 months, live with it.
Yeah. Okay. Then the next thing I wanted to talk about is like, sir, market में बहुत like you open Twitter and you come across these fancy theories, jargons. Someday there's a problem of decoupling, then there's de-dollarization. We heard about inverted yield curve, but then nothing happened after that. Like it just became a story or something that we read about in the past. But around that time, around that time, we made a lot of investment decisions.
That was the story of that time, correct? But that is part and parcel. This is nothing in the like 2016, 14, before that, maybe 11. The whole story on TV 18 used to be oil prices going up. So I was giving one interview to one of these channels and they said, what do you think of the market? I said, market is good, nothing wrong. I was like normal. So the price of oil used to be some $80. If oil goes to 100, then if oil goes to 100, it will not be good. But today it is good. For whatever reason, the whole discussion of the oil is going to 100, oil is good. But it was at that time 80. How can I imagine that oil is going to 100, and maybe it never did in those days? But so I said that the stories like this, that if you ask your friend, how are you? And he says, I'm good. Can you ask him, but what if a truck hits you? Then he will say, then I will not be good.
Yeah.
So point in general is these things will always be there. Sometimes inverse yield curve, sometimes this thing. So what we do broadly, कि हमारा 90% portfolio change नहीं होगा. The difference with the purest guy is वो कहेगा मैं I will not even read it. I don't do like that. Because here one fellow has misled all these guys. That guy's name is Mr. Buffett.
Yeah.
So Mr. Buffett क्या कहेगा? Don't waste your time reading about the economy. So these guys will quickly say, we are not reading about the economy. But what Buffett does, because he's smarter than all these guys, he has more than 100 businesses that he owns. Private.
Yes.
He owns broking business also. You know that broking means real estate broking. He owns, he's selling jewelry. He's selling sofas and all in that carpet.
Yeah.
Okay,
Yes.
he's doing chemicals. He's having that freight company, train ki company. So every month, he himself says that I get one page from each company, each of his company. Why does he need to read about the economy? He is the bloody economy. Because in each sector, he can see jewelry sales are not going up or going up, or housing mein how many deals have been done or not done. So he says, don't read the economy. But the fellows who don't have that.
Yes.
So on that basis, हम भी अगर करना है 5-10% घुमाते रहते हैं, we are also busy every day. कि भाई yield कम हो गया, इसको 5 कम कर दो, उसको 5 ज्यादा कर दो. 90% doesn't change, and you are having a feeling that you are in control. Instead of saying, I don't read all this, I don't react to all this. So that is the difference. So don't overdo, but you must know all these things. It's part and parcel of this game.
Yeah, like beyond the point, nobody knows anything.
Nobody knows anything, but do a little bit. Not say just because you think that nobody knows about anything beyond a point does not mean that you say I don't want to learn anything.
Yes, yes. It should be balanced also. That's I wanted to know about. There's one thing, like we make so many decisions on investing. We have to juggle between different things, sectors. You manage multiple, you work in different countries also, experience of how this company works, this country works, this works. So how do you read market psychology in general that you know that this decision should work? Like, how do you read market psychology in general?
I don't think it's like that. Basically, first thing is to absorb that over time, equity markets do better than alternatives. This is black and white. But we are anyway only equity guys. So for us, as I said, unless something is blatantly overvalued as a market, I mean, or blatantly cheap, beyond a point, you can't do much about it every day. Ki, suppose, US interest rates went from 4.8 to 4.75. वो सब हमारे को समझ नहीं आता है, because it is too small thing to make more than a few decimal basis point difference to anything. So market psychology, if you mean like that, we are only looking at some turning points. And there also you may be wrong half the time, because you may not be willing to take a full aggressive view on that basis, because those are not natural things that come to bottom up guys. But as I said, if you can do 10-20% out there, it gives you a sense of control that you have reacted to some breaking worldwide event. But it is very difficult to completely become that, because that is a game followed by a different set of people who don't know about stocks. They will only do this macro between currencies and interest rates and risk appetite and all that. So mix and match of that. That's the main point. Don't overdo on those factors for our kind of investing. And in theory, our goal is to beat the index. At least in 90% of the cases for us in one fund, because we do long, short and different. But the thing is to beat the index. वो गिरते वक्त भी index beat कर दिया, you have added value. वो compounding में it helps.
Yeah. All right, that was an interesting, very good answer. Now, before I wrap up this podcast, before I started recording this podcast a couple of days ago, I made a social media post. Like, if people want to ask you a question, so I have a few questions of that. I'll give you.
Let's sit properly then. Okay.
There are 3 questions on community questions. How much? So this is only for retail people. So how much percentage of my allocation should be in equities? I'm very new to investing.
Quick one, if you haven't subscribed to this channel yet, please do me a small favor, hit those buttons, you know the drill. Your support is the only reason that I've been able to have these incredible guests on this podcast who are trying to bring more value to you. So please do me a small favor, hit that subscribe button, like the videos, ring the bell icon, leave a comment, share the videos with your friends and family who are trying to build a business, whichever platform you're consuming this on. That's it. Now, back to the podcast.
So if he's very new to investing, let us say he's very new in the work force. That means he's young, most probably, right? So if you are young and your job is safe, or if you are living with your parents or whatever, I think you should have very high in equity. Because आप किस चीज के लिए save कर रहे हो? आप save कर रहे हो that retirement, children, travel. But travel वाले के लिए भी इतना कोई equity में नहीं करता. So it's mostly bigger goal, house. So the thumb rule in life that I read somewhere, which I don't know how they made it, is say 100 minus age करते हैं वो. It's your percentage of equity. So if you're 25-year-old, you should have 75% in equity. But effectively saying the same thing, that if you are younger and you are in a steady job, you should have more in equity, because that is in black and white, that over time, equity market beats other forms. For this, I have many actual data. You can type also and see these returns on Google. If you say 20-year returns, 50-year returns, then a 5-year return. So that it should be more equity. And in equity, the markets never go away. Stocks can disappear. In the sense that stock can go to zero. Markets, you can analyze them. For example, if you look at the market in Japan in 1939, before World War II started, अब आपने Japanese stock market में कैसे डाल दिए as a Japanese fellow, let's say. Even then, over a slightly longer period, that period then will become very long, by 15 years, 14 years. But you will find that it was better for you to have invested in equities in 39 than in debt in 39, if you held it. And that does not include any averaging. So when you are young and you're doing from a monthly, you're doing averaging. So basically, हम तो equity वाले हैं, वैसे भी equity की story सुनाते हैं.
That's very good. How do you see this Chinese stimulus package? Is it going to affect India?
Actually, China ki problem is that people are worried. You know, Janet Yellen is going to US, I think today or tomorrow, or she has gone. And her discussion is that she's discussing with them that stop dumping, because China is doing very badly right now, right, as an economy. So in India, the negative will be not so much the stimulus package, is that if they continue to sell, as in dump, then India will have to put duties. That actually, you may say that company is benefiting or not benefiting, but then the customer is not benefiting. For example, on solar panels right now, you say you can't sell it cheaply, but then the buyer of that solar panel is this thing. So a bigger issue may be that in November, if Donald Trump wins, Donald Trump has stated, now he may not do it, but he has stated that on Chinese goods, 60% duty. If he puts 60% duty on Chinese goods, I think this market and all markets will fall, because it trade flows, ये जो सारे खराब हो जाते हैं ना. So then what happens if they put, suppose in theory they put, he may not put, then the Chinese will try and dump here and other parts of the world.
Yes.
What else will they do? Then India will put duties. Then when India puts duties, then somebody else will say this stuff, India on my item put duty in India, so I am putting a duty on them. To stop confusion of the now who's the winner, who's the loser. And generally trade goes down. And if trade goes down, many companies in our market are related to who's doing what. There might be a new set of winners, but the winner doesn't get a high valuation because his earnings are protected, and protection doesn't get higher because people think it's short term. So you will not get a multiple on earnings which are protected earnings, because you don't know how long that, it just throws everything out of gear. But the issue will be that currently we are making this story of manufacturing revival and stuff like that. And here the story is that the Chinese want to restart their exporting to the world, because for some time they thought they are doing well. So they said, we don't do this environmentally unfriendly stuff like making chemicals. But if you are doing badly, everybody forgets all these rules or their restraints that they were putting.
Yeah, we covered the last one, but I'll just tell you, like, how do you pick a stock using basic metrics, P, ROC, ROE? I think we already covered that.
But in this, ROC and ROE both are required once you understood the concept of investing. Yes, all
Now,
these three are basics. These are not high form. These are basic.
yes. Now, like, sir, you have been in the markets for 30 plus years, like exactly, I don't know exact year, but 30 plus years.
29 years, something like that.
Yeah. So what gets you excited about the markets? Because somebody who has just entered in the market, they might have made some money and like they might not have
ये
made any
तो
loss.
गेम है, यही तो बात है.
हाँ,
अभी तो आपकी मीटिंग खत्म होगी तो हम कुछ और एक्साइटमेंट में पहुंच जाएंगे.
हाँ,
That is, I found my love without knowing who I
yeah,
love. So yeah, this is too difficult. Each person has to find out whether they enjoy it or they are doing it for a living or to make money or to invest their savings. I do enjoy every bloody second of it. Now what can
yeah,
I do? There's no answer to this. Each person for himself. Some
yeah.
people like other things, so I like this.
And there was the last question that I had, like there was an interview where you talked about when you were working with Alliance Capital, you told them don't miss out on India. So can you tell us that
No,
story?
in
Like,
fact, they have goofed up big time. Big as in biggest time. So what happened, as I was telling you, we were the biggest AMC in India among the new AMCs. And then Alliance became Alliance Bernstein. So now it's called Alliance Bernstein. So when the Bernstein guys came in, then Alliance Capital or Alliance Bernstein decided that they don't like single country businesses. So when I was working in India, that's a single country business. Otherwise, Alliance was in managing. Like when I was in Singapore, I was managing money in 9 countries. So they wanted to sell India, and that is when I said that bloody don't sell India. We are number one in India. A bull run has not come. Mutual fund industry has not picked up, but within that industry, we are number one. Now, since they were selling off all their other businesses that they had in Poland, Brazil, South Africa, Korea, Taiwan, then they sold India. By the way, they sold India to Birla. So that's when I started Helios. So what happened is that if they had not sold, I was very happy with Alliance. I was totally enjoying it. Since that time to now, our performance in Helios is better than HDFC guys' equity performance. Okay. But let's say it was plus minus. Actually, we are better, but just to say. Okay. Now the thing is, if we had stayed, we mean Alliance had stayed in India, in theory, Alliance would have been plus minus same as HDFC. Let us say it was 20% lower, although that time we were bigger. Alliance Capital, because it's a US company where the market caps of things are lower, India, but everything is dreams. So Alliance Capital market cap is, I think, 3 billion. And HDFC mutual fund is some 10 billion or billion. So in theory, the Alliance India market cap could have been some 6, 8, 10 billion because we were bigger. And since then also we've done well. I mean, we would have had to scale up. That op shop should also be that big, but wo ho jata hai sabka. So in theory today, Alliance India, if it had existed, would have been bigger than Alliance currently. What a goof up. So when I told this recently, I was in New York, so I met those old guys and I said, you know how much you guys would have? He says, oh, don't, I feel like puking. And how much we have missed. I said, you bloody jokers, if you had only listened to me.
That must have been a big, like,
who knew at that time that these things can become so big?
Yeah.
But at that time, it was big. That's the main point. And
That's
we could have, why not? We could have also done it. Everybody could have done it.
That's a great comeback story. There was a fantastic podcast, Samir sir. Like, I wish I had more time.
Anyway, thank you very much.
It was a pleasure speaking with you. I hope a lot of people join the Helios family and we see Helios becoming #1 again.
Now
you're already
need has to be covered, but okay.
Soon, why not? Like if you're shooting for that, like why not? So I hope you guys found this useful. I hope you found some value. Please feel free to ask any questions on Twitter. Samir sir is already helping a lot of investors. And any last thoughts that you'd like to share with the viewers, Samir sir?
No, I'm saying you had a good point. Remember Helios. Why not?
Yeah.
Okay, thank you very
All
much.
right. Thank you, sir.
Best of
Thank you.
luck.
Have a great day.
Bye.